Alright guys, it's Jason Greystone here from Trade Empowered, and I just wanted to share with you what I'm looking at on the pound dollar here. I've been going through my analysis and the pound dollar's part of my portfolio. So I thought I'd share with you what we're looking at and what we do every day in the London live trading room. So you can see that we're bearish, the market's been bearish, and we're effectively down at the lowest since May 2010. The pound dollar, this pair has just been bearish for a long time, and we're now at the lowest point since 2010. Now there is a lower level of structure down here, structure support down here, and typically in the market when there's an area of structure support or resistance this close together, then typically the lower or the higher, depending whether it's a bullish or bearish market, level is tested. So I still think that we might see price action go even lower, but we are at a previous level of structure support. So any counter trend traders looking to ride the potential relief in this market, you might be looking for a long opportunity down at this level. So if we drop down to the 4 hour and zoom in, you're going to see that the RSI is massively oversold. It went oversold down to around 11, and market's starting to put in this double bottom formation down here. If we drop down to the hourly, well, you're going to see that market effectively already put in a double bottom here. This would have validated as a double bottom. RSI was oversold on the initial test, which is a good filter. We got some bullish divergence on the RSI. We put in equal lows. The low of this initial test was tested by the second test. So any double bottom traders would have entered next bar market looking to ride up to target ones. Conventional targets are the 382 retracement from the previous swing high to swing low. So you would have hit your target ones, well done, and you'll be waiting to ride the market up for target twos at the 618 or previous structure, which just so happens lines up with a 618. So you've got some previous structure resistance here lining up with the 618. So any double bottom traders will be still in that position if you trade two contracts. More conservative traders may have waited for a 2618. Now a 2618 trade is effectively a double bottom followed by a break and close above the retracement, which we put in on this candle here, and then you're waiting for market to pull back into the 618, which is down here at 142.76. So you'd be involved in that trade, and you'd be looking for targets at previous structure highs. Now the problem with that is it's not going to offer you a good risk reward ratio, because your stops would need to go below the lows down here, and then your targets are at previous, or target ones at least, are at previous structure highs. So that's not going to offer you a good risk reward. So anyone who's day trading, you might be looking for another reason for entry. Anyone who day trades on the lower time frames, if we drop down to the 15 and we bring on our Fibonacci retracement tool, you're going to see price action pushes into the 618 level here, which puts us on Gartley pattern alert. If those of you who trade advanced patterns, you're waiting for a Fibonacci extension from A to B and back down, which gives us a nice Gartley pattern down here at 142.61. Market's pushed down. You're getting a better price for entry now. The pattern's still valid, because to invalidate this pattern, the D completion would have to, the D leg would have to push and penetrate X. So still valid. You're getting a better entry now. So if you was to enter at market now, then you're going to get a very nice risk reward. And if we draw that out, let's just remove some of this so you can see what I'm talking about. You're going to get conventional targets. If you're taking conventional targets, you're looking for target 1 up at the 382. Okay, and you're looking for target 2 at the 618 retracement. Whoops, just colour this different colour so you can see clearly what we're looking at here. And stops below X. I can't advise you on stops, but those of you who use 10 pip stops or ATR based stops, some of you might even use a Fibonacci extension as a stop, but typically you're going to be between 10 and 20 pips below X, and that's going to offer you a nice risk reward. You can see it's a 2-to-1 to target 1. And then once target 1's a hit, you're going to move your stops to break even, putting you in a free trade to target 2. So just thought I'd share with you what we're looking at here on this pair, and we'll be running through our analysis in the London live room in the morning. So just following up from this Gartley pattern that we identified, although you would have had to adjust targets, your ATR based stop would have been down at 42.27. So you would have had to adjust targets, but you can see that you would have hit target 1 now, which would have been at the 382. And now you're rolling your stops to break even, so you're in a risk-free trade looking for target 2s up at the 618. So just to finish off, you can see that the little Gartley pattern we identified here on the day trading time frame, for any of those counter trend traders out there, you would have rolled your stops to break even, you would have been in a risk-free trade, and you can see that we just hit target 2s up at the 618, giving you about 34 pips of profit, which was a nice little profit out of this day trade. And this is effectively what we do every day during my London live trading room. So anyone interested in joining that room, you can join for free over at www.tradeempowered.co.uk, and when you come into the room, you'll basically see me trading like this, doing this and that, this top-down analysis on my entire portfolio and trading live throughout the day trading hours, which is 8 till 11 AM British summertime. So feel free to go over there, sign up. I'll look forward to seeing you in there. Anyone who's interested in more free educational content or educational videos, then check out my YouTube channel, which is youtube.com/Jason Greystone. And I look forward to seeing you soon.